Hey traders, this is Ron at Market Tamer. Happy Tuesday. Hope you guys had a fantastic day. As always, everything in this presentation is for educational purposes only. All right, let's kick off here with the SPY. First day of October brings some selling pressure. The S&P was down about 30 points. SPY on your screen about $3 or so, down 1%. But more importantly, we've now closed below the institutional moving average, which is the orange line. And three bearish engulfings here in the last 6-7 days. We had one here. We had one here on Friday, and now we just got one again today. Taking out the previous lows below the 50-day, it almost looks too pretty and too easy. The target now would be down here, 285 down towards 282. This little pocket right down here. At this stage, you're talking about 5, 6, 7, 8 to 10 points. That's 80 or 100 S&P points lower would be the target. Nothing says we're going to get there. As a lock, there's no such thing. But using technical analysis, that's where it's pointing right now. So I said yesterday and on the weekend, caution is warranted. You can sort of see why. We just weren't getting higher highs here. We just kept probing and dipping below. Today we broke through. Now, if the volume would have been a lot heavier, maybe something like this from early August, I would have a more bearish tone. It is bearish, but it's not as bearish as it was over here. Doesn't mean we can't get down there. It's just not identical in that sense. So from this point, looking out the rest of the week, I'd be very careful on bullish trade ideas unless those stocks are above their moving averages and they're just outperforming and they're looking good. But just take stock XYZ, as an example, and you see the S&P doing what it did today, you'd want to have a lot more caution in your trading approach, would be my opinion. Now, taking a look at the diamonds, the DIA. Down over 300 points, 1%. It also closed below the 50-day, not by a ton, but it did. Volume really didn't spike, but where would the target be? Ballpark 256-ish down to 254-ish, another $2 pocket. That would be about 900 or so points lower on the Dow. If we take a look at the Qs, they were down under 1%, bearish engulfing here. So we didn't have quite bearish engulfing on Friday, but we did a couple days before that. We did not take out the most recent lows. So out of the three today, the SPY did the worst. The Qs are hanging in there a little better, but if we take out 186, then you'd come down here to about 182. If we take a look at the VIX, $VIX, it did surge today. You had a nice big pop, opened around 16, finished around 18. The way the VIX is acting and it's popping higher, it looks like the market it's sort of validating what the S&P did. And the spiders sold off. Therefore, VIX is moving higher. It's in tandem. There's no major divergence here. Taking a look at bonds, TLT, I was surprised to see TLT wasn't up a little higher. It was only up 0.13% according to TradeStation. We didn't even take out the recent highs. You would think with the market selling off and if there's going to be some extra selling pressure, we would see TLT rise more, not just 18 cents. And then if you look at gold, GLD, sorry. GLD was up only 0.5%. It couldn't even couldn't bullish engulf the previous day. There was not above average volume. It's still below the 50-day in orange. Therefore, it's still bearish on the daily chart. Interestingly enough, TLT and GLD did not move opposite the major averages. So let's go check on Apple. As Apple goes, so goes the market. Well, Apple was up about 0.5%, about $1 today. If I zoom out, it's still trying to get up there and challenge those all-time highs. It did come way off the highs today. But considering it was still in the green, that's a win. And how about something like Google? Google is down about 15 bucks, a little over %. It did not close below the 50-day. So if I was trading Google or just watching it to see who's winning the battles here, the bulls aren't dead yet on the daily chart. If the bulls can hold the 50-day, which also acted as support back in August, the bulls can retain that edge. If we get below the 50-day, then support would be this horizontal area around 1160. And the bulls would lose their edge. So again, it's all about the 50-day. It's that line in the sand, which ways, who's winning these battles. All right, how about Kellogg's, ticker symbol K. Now I'm bringing this one in. So if I zoom out, it's a stock that I had brought to your attention a while ago, had a big move up and it's been consolidating. And I said, hey, this one could be interesting if it starts breaking out and moving higher, because the next technical target's up there at 70 and then back up to the highs. That's a considerable move for a stock like Kellogg's. Well, if we zoom in a little further, one of the things I said to you guys over the past couple weeks is watch ballpark, what did I say, 65 or so. Watch that 65 area. We need to clear these highs on a closing basis, not intraday, and that would confirm this bull flag breakout. Well, guess what happened today? Down 2%, below the 20-day. We get below the 50-day, then any case for the bulls on the daily chart is gone. But here's the bigger thing. This is the difference between jumping the gun or waiting for confirmation. If anyone, of course, paper trading, right, was trying to jump the gun, if I zoom in a little closer, just a couple days ago back on 9/26, that would have been Thursday. Well, look what happened. You're looking a little silly right now, you could say, or have less capital in your account because you didn't close up there. That black candle represents top left was the open. It looked good, but then it closed lower than where it opened, but still higher than the previous day. Therefore, it's a black candle, meaning it was an up day and not a red candle. And again, the body's filled in black because it was still closing lower than where it opened. You never had that confirmation of a breakout, and then today the bottom falls out a bit. So we'll still keep an eye on Kellogg's. I'd still wanted to see it break 65, but it's not looking good after today. ULTA was popping on news of a Chanel executive increasing their stake. This was up 6%. I think it was the biggest gainer actually in the market today on the upside. But look what happened. We blew through the gap down price. The next target, you could naturally go to the 50-day, which is around 292. It's almost 30 points higher, and then a gap fill, or maybe at least 320, and then an attempt at a gap fill. It's almost like, I wonder if somebody knew something. All of a sudden, volume started picking up. We started pushing higher here, and today the news broke, and pop goes the weasel, as I like to say. And I had a question on McDonald's. If I zoom a little out on McDonald's, okay, a couple things. McDonald's is interesting in the sense that when it starts to run, it can really make big strides in dollar and percentage terms. It can just go for months on a run. McDonald's had consolidated from November pretty much into April. And once it broke out, 190 to 220, really nice straight line, very symmetrical too. While the red line didn't hold this support perfectly, the orange sure did. It didn't even want to touch the orange line when it pulled back in May and again in August. You notice that? But what happened here recently as we got into September? We had the gap down. Notice it gapped right under the 50-day. We went down, tested support. We then started the break support. Okay, immediate U-turn. That was interesting. It almost like tried to suck some people in before it tried to rip it back higher. But what has happened? 50-day hit back on Thursday, again on Monday, could not close above it, and today we gap lower. If McDonald's loses this 207 area, it's a long way down before it finds major support. There's a couple potential pause points, maybe here at 205, maybe here at maybe 195, but then it's all the way back down here. The point of bringing this in is if you have a stock that you're watching and it's had this really nice uptrend, or maybe it's a really nice downtrend, and it flips on the moving averages, what was once support, now it won't even get above. That's the trend change. So I couldn't be aggressively bullish on the daily chart anymore. I might be thinking if I had stock covered calls, maybe at the money, maybe even a protective put when you break the 50-day like that, because now it looks like it just might start paying off. The other thing to watch too is look at these big spikes in volume. The red oak trees are way taller than the black oak trees. That's the reference I like to use. They're so much taller, so much more selling coming in here that the bears are clearly winning, and it's reflective now in the price. So that's it. Wish you guys all the best. Again, bears are starting to get the upper hand now at the S&P, breaking the 50-day on an end-day basis. I'll be back with you tomorrow. Have a great day.